What's good, team? Welcome back to Big Wick Energy Podcast. I'm joined here by the ambitious boys. Got George here, Rihari, and myself. Today we're talking about our entry models, what makes a great setup, what makes an A+ setup, and everything that goes into that. Awesome, let's get into it.
Tell me what you want. What you really want. I wanna be down.
Big topic things, man.
I wonder how many people's going to watch this one. Trying to catch some little golden nuggets. Interesting though, because although all of us trade the same strategy or the same foundation, as I like to call it, we all have different entry criteria into our trades and looking at different stuff. And I think most of that's been developed over just our personal experience within the market. And, it's different, what do you call it? Market timing as well. You're trading Asian, we're trading New York. Our entries are pretty similar on New York. But I noticed like last time you were over, when we were trading, we're easily trading in Asian session for you, and you would trade off. I remember this entry to a trade. You went to a sell right at like the extreme of the high, where I was looking at the candles and I seen it just pushing through, but I was used to that volume being, within New York, and you're used to it just, sort of just getting resistance from those sorts of levels, and you went into a sell, and I was like, wow, that's wild.
What's doing?
But again, it was just sticking to the foundation as well, because if it's not going to, break that high, it's going to come back, and obviously the experience that you have. Yeah,
it's funny you mentioned that, because obviously switching from London for me and now trading NY, that's exactly how I used to trade. As like not exactly, but off those extremes, knowing we should get rejection from here, and I'll get in for a 1 to 3, 1 to 2, whatever. But trading NY, I'd be like coming up, staying on the 1 minute time frame, not realizing I'm in a bullish one hour candle. But you know what I mean? And then it pushes straight through that level. And that's what you're talking about, The NY volume's just way different.
Yeah, and it's just that market timing, which sort of switches up our, the way that we have our entry criteria. Because after that, when we started trading New York that night, it was going bad for you, eh?
Yeah. Oh, I can't even remember.
Yeah.
Was it?
Like that first night, you're sort of...
Oh, yes, I do remember. Yeah, because I hadn't traded New York in ages, and I was like, fuck, I don't even know what I'm doing anymore.
Yeah.
Like, what is this volume? Like, I was so used to Asia volume that, I'd get in those extremes, and then, NY volume's just like breaking those.
Yeah, it's just pumping.
Yeah, or just sweep it or whatever, like...
Yeah.
But still break those levels. So, I remember, and then we had to adjust, and then we were looking at, like different like volume profile levels, eh? That's right, bro. And we got into those NAS cells, eh? We got into those NAS cells.
Nasty.
Bro. And I remember you went in a few cons, and I was like, oh, I'm just going to, take it easy. Only put a couple cons in, and it like melted, bro. And I think I got out real early, and it just kept going, eh? And you might have just stayed in, and I was just like, damn.
No, I had got in, I think it pushed like 1 to 2, 1 to 3, and I had gotten out.
Yeah.
But it ended up going like 1 to 10, eh? And I think Slade had gotten in late.
Yeah.
And he had held it longer, eh? Yeah. Like, he was pumping it.
Yeah, NY volume, eh? It's just, major key to look at like the sessions that you're trading, and like the difference in every session, just because different volumes, different markets. So I don't really trade New York anymore, and still like when I come over here and I see the boys trading New York, I'm like, damn, seeing all those perps go, and it's just like, man, I need to get back into this. Yeah.
Recently though, like you were saying that you got into a pretty solid buy on US30.
US30.
Was it US30 or was it gold?
Gold.
Was it gold?
Yeah.
And you were saying that you held it. Hey, you went in an Asian and you had held it through London and somewhat into New York before you went to bed.
Yeah.
Oh, that's crazy.
Yeah. Just because of that's what I know.
Yeah.
And that's what I've been trading, and I'm trying to build up the tolerance of holding longer trades. And so just gold lately, over January, bro, just nice bullish market structure, just continuously making higher high, higher low, higher high, higher low. And after seeing that, just might as well just hold these for a bit longer and trade with the trend. Yeah.
So with that trade specifically,
Yeah.
Would you say that it was a grade setup for you?
Oh yeah, 100.
Yeah.
Yeah. Because I'm on just one trade, I'll enter in Asia. That's my one trade. Cool. And I will just continuously just push, and I'm just trailing stop.
Yeah.
Yeah. So either way, I'm gonna make profit. Yeah. And if I can hold it as long as I can, then that's me.
Yeah.
Because sometimes that London move, they can come back down
Yeah.
pretty deep.
Just reverse. Yeah.
Yeah. Take the low and you're out.
Yeah. That's it, bro.
But that trailing, doing that trailing stop loss
Yeah.
secures profits no matter what.
Bro, especially with Apex, those Apex rules. It's you have to do that, eh? So it's yeah. So yeah, if I'm trading an Apex account, I'll kind of adjust the way I manage my trade.
Yep.
Just because unrealized profit drawdown, that's that's a different beast in itself, eh?
That's the stupidest rule I've ever heard.
Oh, bro, it sucks, man. So
I found that one out the hard way.
yeah, yeah. You're I've only lost 3K. How come I've blown the account? I've got 7.5K in drawdown. Doesn't make any sense.
Yeah.
Like,
And at that point, I was up 12,000.
yeah,
And then, yeah, it's crazy, bro.
yeah. Read the rules. Read the rules.
What are you looking at for, what are you getting into anything else that's not an A-grade setup? What would those trades look like? And is it a impulsive trade?
Anything that's not a grade setup is probably an impulsive trade. If I see a very internal change of character and it's coming back down to a POI, I'll impulsively get in. But that's what I'm willing to risk, and I'm happy with that. And usually it goes my way. Usually I'll get a rejection from it, and then BE, boom,
Yeah.
and profit.
Nice.
Yeah. But other than that, yeah, it's just A plus setup. So, and that just looks like a POI that lines up with market structure, and maybe it also lines up with a volume profile level. If it's a higher time frame volume profile level, like a monthly or a weekly level, if it's a previous week value area low, lines up with a nice pullback or a retrace from in a 5-minute or 15-minute range.
You should open up your chart and show us what it looks like.
You guys, you'll be looking at the matrix, cuz.
Oh, that's crazy.
Yeah. So I've got all these levels just marked up on my chart. You can't even see the candles, just horizontal lines. So yeah, horizontal lines and then just price. Yeah. But I've been testing a few things out, and Jordan saw my chart and he's just like, bro.
I was trying to find the candles.
Yeah.
Thought it was a sketch pad, not trading view.
Yeah. So it's something that I'm trying to work on, is just find a good way to see the actual chart itself. So you have because if you're a new trader and you just got a laser show on your charts, that's really hard to find an actual direction on your chart, or it's hard to see a clearer direction. So when you see the boys, when you guys post your analysis up, George has got clean charts. So
yeah. I used to have all the volumes and that on my charts, but I just had to take them off because I'd almost talk myself into price going to one of those, but not knowing why, or
and
be impulsive.
Yeah.
But probably for me now, just back to just simplified for me. That's what we've spoken about, It's just simplifying everything.
Nice.
Staying mechanical and, just working, whether it's premium, discount, but make sure I'm entering below or, wherever we are in the range in that 50%.
Yeah, nice.
And then working off a POI.
Yeah.
Point of interest, waiting for that. If it's extreme, then I'll just get in.
Yeah.
Stop loss below, previous low.
Nice.
Chasing that, the high that, break a structure.
Yeah.
Or if we're coming down to a POI that's not at the extreme, then I'm looking for that internal chotch.
Yeah, nice.
Which Jesus, no.
I'm just like, because people that are going to be watching this, like, bro was saying, coming down to a value area high and like doing this and that, and then you're saying internal charts, and everyone's probably watching like, what are they talking about?
Bro, the internal chotches are a game changer, eh?
Sharks.
Because I know we have change of characters,
Yeah.
but that's working to our equilibriums and whatnot. But
Yeah, if you want to wait a couple of years,
yeah. Just waiting for a chotch on gold, the daily. But then also I've had to learn, how to really identify an internal chotch, and that's going like we've spoken about. Go to our 5 minute, 15, and have those confirm it as well, not just going off a whim or off the 1 minute.
Yeah. Bro, when you see a change of character on the 1 minute and it closes with a 5, bro, you're like, oh, you're like, yes, it's coming back.
But we saw that on gold the other day, eh? But really, and then we looked at the 15, remember, and it just wicked below and then just flew. That was yesterday.
Oh, that's right. That's it.
Because we were like, 1 minute, 5 minute,
Yeah.
And
Was it yesterday?
And then the bro's like, but watch the 15, and then sure enough, 15 wicked.
Yeah.
Went, yesterday.
Did we go out for breakfast yesterday? That's when we were out for
Nah,
breakfast.
day before.
Oh, was it the day before?
Yeah.
Oh, my bad.
Because you got into the buy. And both got in the buy.
Yeah, that was nice.
Yeah.
Our confluence.
We were at breakfast, but it happened. Like on the 1 minute and the 5 minute, it had that change of character below, which is like an area that what we were waiting for. And then as soon as we seen the 15 like close above, and it was such a bullish candle, I was instantly into a buy. Like that was my like why would it do that? Why would there be so much rejection from the low, taking all of those stop losses or liquidity within the market, close above like that? But for me, I'm not even sure whether that's like a grade setup. Now I would say that's not like an A grade setup for me, but it's kind of up there. A grade setup for me was like was it gold last night? How it was like consolidating all day.
That was beautiful.
It pushed up, closed above, came back to a point of interest, boom, and it just went to the area that we had marked out in our analysis. Like, that was so simple.
Is there a particular point of interest that you prefer to enter off?
Not particularly. Like it depends on what's happening within the market. Whether the market's going to be, sort of consolidating and then, breakout. Like what happened last night, how it had the breakout closure above after consolidation and then created a point of interest before it did that.
Yeah.
That's, I love that.
Yeah. Bro, because that point of interest, I was like, easy buys. Point of interest, which was like pretty like low in the range, low in like the petty array where it was like extreme discount, but also above that point of interest there was a lot of bullish movement creating like an imbalance.
Yeah.
And so you knew like gold wants to fill this and take this POI.
Yeah.
And then ding dong.
So good.
And then sitting next to consolidation,
Yeah, exactly.
price isn't going to, price potentially isn't going to push through that. So it's like,
Yeah.
Hate those potentials.
Hey? What did you say?
Hate those potentials. I would say like for me, those would be my A grade. Like I wait for that to happen. Like if I see consolidation happening, I'm waiting for price to break either side.
Yeah.
And we did see that the other morning with the 1 minute and the 5 minute, which set it up perfectly on the 5 minutes, set it up for that closure below, came back to the POI. But then if you didn't look at the 15-minute, you're getting caught out instantly. Like, you're done. You're losing that trade, brother.
Yeah, for sure.
Yeah, it's sort of just taking everything you can into consideration, you know, just being an all-round trader.
Yeah.
And if that's something that you are struggling with, the 1 minute and the 5 minute, just looking at that for confirmation, look at the 15-minute and, you know, trade off that. I think it happened last night too when we were on London session. We had a 1 minute change of character, a 5 minute change of character, and we were in the premium of the range.
Yeah.
So we were, you know, in the area that we want to be looking for sales to trade it back down to equilibrium or the 50%. But then the 15-minute just wasn't giving us that confirmation. The 15-minute was just massive wicks to the low, and it ended up just pushing higher, which is, you know, the key for us was just looking at that 15-minute. There's no way it's going to continue to go down through there. Yeah.
Yeah, nice, bro. Another thing I like to look at is like candle anatomy for my like if I'm getting into a trade. And today was a really good example of like a candle anatomy trade or candle dynamics. Yesterday, gold closed pretty bullish, and the closure was like pretty close to the top wick. And then today Sydney opened up, consolidated it a little bit. 1 o'clock, Tokyo comes down, and it's just like still staying in, it was like a 5 minute range or a 15-minute range, can't remember. And like the daily really had no top wick. And like the draw on the liquidity of the daily previous day high, I just see that like, oh, we're going to take that out. So I'm waiting for like an entry to come down near a POY that lines up with a volume profile level. And then 2 o'clock comes, and that's when I like to trade because that's when the volume comes in, comes down, boom, tags me in, and then shoots back up to take the previous high day. As soon as like it takes the previous high day, bro, gold just melted.
Hey.
Yeah.
Took all that liquidity.
Yeah, just wants to take that liquidity. Like gold just hunts liquidity, eh? All right. But I see, like I say, heaps of people trading volume profile, and a lot of people just like use the levels and just like buy, sell off the levels. You know, and I think which is like super interesting, and some like, you know, a lot of people make it work for themselves, which is cool. But they don't tend to like hold on to trades for a long time or like, you know, a decent risk to reward. But if you can like marry like volume profile with the AI strategy and fundamentals, bro, it's game changer, man. Yeah.
Well, that's how you make 20 grand in one trade.
Yeah, exactly. That's exactly right. Yeah.
So you would say, because obviously you use volume profile quite a lot.
Yeah, for Confluence.
Oh yeah, okay.
Yeah.
So you wouldn't be trading off those levels?
Oh yeah, sometimes. Yeah, if it lines up with like market structure and the AI strategy.
Yeah, but
Yeah.
you wouldn't trade just off that level just because.
Nah,
Yeah.
it has to make sense. Like, if it's coming down to a value area low and it's coming down pretty hot, you know, heavy as, then it wouldn't make sense for me to jump in there, especially if that value area low is just sitting in the middle of nowhere. So yeah, it needs to make sense in my head. Like, why is price coming down? What are the fundamentals that are happening? Like all that kind of stuff.
But you see price hitting these types of levels often, eh? Like it's so good.
Yeah, it's crazy.
Yeah. Can you just explain what it is?
So volume profile, essentially what it is it's really good on futures because futures is like a regulated market, and that means people have to show their orders. And so it pretty much just shows like where the most orders are happening on the chart, whether, you know, whatever price level it is. So if there's a lot of like buying and selling, say at like 2,800, you're going to see like a node, and like the wider the node is, the more buying and selling is happening at that price.
Which is essentially what they call the point of control.
Yeah, the point of control.
Yeah.
And so, how I like to see it is just like, say if you're an institution and like, you know, the point of control, if that's where a lot of buying and selling is happening, that's probably like the equilibrium. If you're an institution, like that's fair. That's the fair price of gold. Say if the point of control was at 2,800, I'm an institution. Like, cool, I could buy it at 2,800. That's fair value. But if I can buy it at the value area low, you know, I'm buying it at a discount.
Right.
Or if I can sell at the value area high, I'm selling at a premium.
Right.
Yeah. So that's how I kind of
Yeah.
and
And so you sort of have that as like your average, and then the value area high or value area low would kind of be, what would you call it, like discount and premium?
premium. Yeah.
Right.
Yeah. So it kind of like makes sense in my head in terms of like when you marry those levels with fundamentals. And when you see red folders, bro, they tend to hit those levels, whether it's like the previous week or the previous day. You'll see a level like, say if it was like, I can't remember what it was the other week. What was last week? I think it might have been CPI or PPI.
CPI, PPI, yeah.
CPI, PPI, and one of them like just came and tagged, I think it was like the previous week value area low, and then we've just been heading up since then. Yeah. So it's like institutions see this level as the previous week value area low, the previous week discount level. They just want to use that red folder to get to that price, or like pricing that move to get down, and then, you know, start heading back up again, create a higher high. Yeah.
A lot of those big news events, they hit those previous month and weeklies, eh?
Yeah.
I've been watching that as well.
Yeah.
That's crazy.
Because it kind of makes sense, eh? Like, you know, institutions are like interacting at these levels.
Yeah.
So like, why wouldn't like a red folder or news hit those levels again?
Yeah.
To like collect those orders back up, or, you know, try to get the cheapest price possible or sell at the highest price. Yeah.
Yeah, like that's the psychology around those sorts of levels. These are levels because when you use the volume profile, you put it over a period of time.
Yeah.
And so with that period of time, it gives you obviously the value area high, the point of control, and then the value area low. And thinking about the psychology of that, these institutions are the people that control the market. And so if they're controlling the market, or majority of the money that's going into the market, you know, these are the types of areas where they feel in themselves, which are the market movers, that, it's low enough, I'm going to buy it.
Yeah.
Or it's, you know, high enough here, we are going to take our positions out.
Yeah.
And then, you know, wait for it to get lower for us to
get back in.
Yeah.
Which
is, you know, thinking about that psychology around what potentially they can be thinking, it makes sense.
Yeah, like, and when you do it with the AI strategy, like AI strategies, like based on like SMC, which is like, you know, smart money concepts, and smart money concepts is based on how the institutions trade. And so if you're basing a trading strategy on how institutions trade, why wouldn't you use the levels that institutions use, which is the volume profile? So that's why it makes sense for me to put those two together.
Yeah, nice.
Yeah.
Just back on the volume profile, do you, like I use it, do you use it just for a swing high and swing low too? Or like that of that range?
Yeah, that's a good one.
So not necessarily over the time, but if you've had that push, that I use it over that as well. Again, with what we do in our strat. And if those levels line up with something down in the discount or premium, that's just that extra confidence. Especially if it's like a point of control.
Bro.
It's like, oh, yo, we in.
Boys, eh? The boys. So this will be obviously with your trading. This will be definitely a key thing that you're going to implement into your A grade setup for.
Yes, sir. Yeah. And like, I break these down on the Discord, so if you guys want to see, it's all in the exclusive Discord and how I trade it, or live too.
A few breakdowns in that, eh?
Yeah.
It's pretty cool. Unreal just how it all unfolds, eh?
Yeah.
Yeah. And recently, George, you've passed 3 accounts, 300K accounts on Apex
Yeah.
in one day. Which, you know, if we're thinking about the whole profit behind that, that's 60,000 USD in one day.
Yeah.
What,
That wasn't copy traded either.
that wasn't copy traded.
Nah,
which is nuts.
I was just in and out
Yeah.
between each account.
Yeah, that's crazy, bro. Through that, like obviously you have what you deem to be your A grade setup as well. How many trades would you say that you took within trading those accounts and passing them would have been an A grade setup
At least 2 of them were.
throughout all of them?
Yeah, well, I think I did them in, like I said in the previous podcast, I made that first 10 on all of them, and then it took me 2 trades to finish the rest.
Yeah.
So there was, from memory, I caught two A plus, and then the final one was kind of just to push and get that profit.
Yeah.
So definitely 2 of them were.
Yeah. And this is all in one day as well. So you're definitely able in one day to find multiple A grade setups with how you're trading.
Yeah. That final setup, like it was still to the strategy, but yeah, probably going a little bit more off volume as well.
Yeah. Yeah.
What pair was it, guys?
It was US 30 and gold, yeah.
Oh, nice.
Yeah. Damn. Because those US 30 candles, bro. And comics, man. Oh.
And it's so good on futures as well.
Yeah.
Because like the value per contract is so much, especially when it every pip it moves is crazy. Because what is it, like $12.50 per pip, and then you're timesing that by whatever contract.
I think for NQ it is. How much is US 30? Yeah, I think I can't remember how much US 30, but I don't think it's as much as NAS.
Right.
Yeah,
Right.
but
It's pretty up there though, because I remember trading it on
okay.
Apex.
Oh, maybe yeah. They do go hard.
Yeah, it's crazy. So with those A grade setups that you're looking into, what would be, how do you find those? What do you look for in your A grade setup?
Well, yeah, we're trading. We've got the trading range, so we've sorted that out. Again, I'm looking for it to come down into a point of interest, and if we're in bullish market structure, then I want to be entering in that discount. Ideally, I want to be hitting it off the extreme, so I've got that whole range to trade.
Yeah,
and that was that was the 10K trades, was hitting off the extreme, and then with NY volume, it's just you're going to the other side. But yeah, that's pretty much it. You just working off that discount, working from POIs, waiting for that confirmation with an internal chotch, not necessarily off a extreme, but then also taking into account, the higher time frame candles coming down to that level, because we know they can just push through. But if I see price just coming down slowly, down to that POI, I'm like, yeah, we're on here.
It makes it a lot easier for you to be like, yeah, I'm going to get
But then, sometimes you'll see it come, it'll come, melting down and then just reject straight off.
Yeah.
But then our entry criteria is not there. So, we just can't get in.
nice, bro. Disciplined.
Yeah. Which is hard.
Yeah.
Because it's like,
So you wouldn't just like enter in like FOMO win even if the volume's going up?
yeah, I need to see that structure built.
Yeah.
Otherwise, if the criteria is not there, I'd just be, especially if that volume's going one way and I don't see it stop and build market structure, then my entry's not there. And unfortunately, I just have to watch but then, you could get that potential pullback later in the range, which I will trade as well.
Yeah. Oosh. I like that, guys. Yeah, because I think a lot of people see like, I didn't come down to my level, and it already rejected. So like, hey, FOMO win. Do you ever do it?
FOMO in?
Yeah. That impulsive one?
Not with my life.
Yeah, nice.
B grade setup.
Yeah.
So with your A grade setup, you know, you're waiting for it to come to the extreme before you're entering. How long on average would you be waiting? Like, you know, have you marked that up ages before? Have you just jumped onto the market, seen it, you know?
Well, sometimes, yeah. Like we see with our bigger pairs, like US 30 and NAS, like that won't get hit until the exchange open and that. So sometimes we're waiting all day for that. But then we've got our 4X pairs where that could happen within filming this podcast. Yeah. With the alerts going off. No, but you know what I mean? Like the 4X pairs that are moving during Asia and that, then yeah, they move. Yeah, those levels will be, it could be an hour, could be 15 minutes, you know.
Yeah.
But the other pairs, you know, they're not happening until NY.
Yeah.
So I'm waiting, you know, you're just waiting, which is hard, having that patience.
How do you set your alerts? Are you writing like GJ's coming into a point of interest down in the discount?
Yeah. And then I'll have an alert saying first point of interest, second point of interest,
Nice.
and then I'll have this coming into the extreme, get ready to buy or sell. You know? And then on the middle point of interest, I'll just be saying, just like a note saying, just monitor the price action coming into that level.
Nice.
If we get rejection, internal charge, we on.
Yeah.
Bro, it's so mean.
That's on.
Because he jumps onto my trading view just because we mark the charts up. And so he jumps onto my trading view and he's like setting all the alerts with all of those for it. And I'm like chilling, and then I'll be just like randomly watching TV and I'll get this alert and it'll be like sell gold or something like that.
Sure.
And I was like, oh, sell gold. And then I'll be chilling watching, and then like 30 minutes later it'll be like TV1. Lovely. But it's been good, like trying to show the bro that, because for everyone that isn't within the Discord or like on our free Telegram and that, this is the sort of level of trading that we want to be doing, because we are going to be bringing signals out, bringing signals back, but it's completely free. So if you guys want to be in on those signals, these are trades that all of us are going to be trading with our A-grade setup. It is completely free. You just have to hit the link in the description below. We have partnered with Blueberry Market, so they've been very kind to help us with this initiative and help everyone in that wants to, you know, get into trading, learn trading, but also be able to make money whilst they're learning. Be able to do this. So yeah, if you want to be catching the trades that we're catching, then join the signals, hit the link below. Absolutely free. Yeah. But little plug there. But yeah, so with those 3 accounts that you end up passing, so there was 2 of them that were your A grade setups. And that pushed, that first trade was about $10,000 each.
I think they're just a bit over.
Just a bit over.
11.
And so going into that, you sort of explained in a few other podcasts that after you do that first initial big trade, you're going into a couple of other trades. So with those other trades, are you still potentially looking for that A grade setup and just de-risking, or?
Yeah. So still always looking for the A grade.
Yeah.
But yeah, definitely de-risking, like we've mentioned before. Like I treat my evaluations a lot differently to my lives. So I'll pretty much full port to get that 10 over the market, and then I'll de-risk for the final 10, and then sometimes that gets broken up into 2 to 3 trades, possibly more if you take a loss. But still looking for that A+ setup. But on that third setup that I took, it was like just going with volume just to get it over the mark. Yeah. Nice. But that again, like, yeah, I already knew where price was going. I was kind of just jumping on a bit late.
Nice. Yeah.
It's a hard one, eh? Like, especially when you're trading NYC, and you know that volume's going to be going in a certain direction. and you don't want to miss it. Like I was the same last night trading NAS in US 30. Like price was just dropping, like, absolutely melting, which like we knew that was going to happen because we're at highs. Like NAS pushed the all-time high just recently, and we had, you know, huge space down below to be filling, and it did it last night. You know, it came all the way down to a point of interest that we had marked out, which was in the extreme, and as soon as it hit that extreme, just absolutely pumped. But then during the time where I was trading, it was just melting. There was no real entry criteria that I would usually get into for like my A-grade setup. However, my knowledge, I guess, with market timing around NYSE, I just see it happening all the time. And so I was getting into that trade with volume, which I don't know, it's a hard one to sort of comprehend because it's not like a real entry criteria because you don't have a specific area where you can be putting stop loss.
Yeah, right.
You know?
You're not waiting for a pullback, you're just going to push with volume.
Yeah.
But you had that. But then you had that target.
Yeah.
That's true.
And you with your the experience in NY, you knew that volume when one of those pairs goes, it's going.
Yeah. What do you think that you would call that? You know, like
I think it's just like intuition, eh?
Edge.
Yeah.
Edge.
Impulsive.
Actually, though, you know, like
The word of the week.
there's different ways that you can look at it.
Yeah.
You know, other people might look at it, oh, you just impulse traded into that. But when you see it happen so many times, you know, like, is it really? Yeah.
No, but yeah, all the technicals had been done, you know, the analysis. You know, you knew where it was going and you were going with volume.
I've sort of fought that in my head a little bit, eh? You know, like, because like sometimes you'll enter, like you're entering on the volume and then it'll get like a bit of a pullback. And because it's NYSE, it, you know, pulls back viciously. You know, it just moves very viciously. Like you could enter and like within seconds you could be up like 30 pips. Or you could enter and within seconds you could be down 30 pips, you know, when you're going with volume. And so I've sort of had a battle in my head about that whole situation. Like it's definitely not an A-grade setup, but because it is something that I see so often and I have traded it so often, but that's not the type of thing that I would send out as like a signal.
Yeah, right.
Or like recommend that other people get into. Yeah, you can look at it as either being impulsive or look at it as either being, what would you, I don't know.
Not impulsive. It's not impulsive.
I think it's your like time in the market though.
Yeah.
Hey, that's experience.
Yeah.
You can't buy that.
Potentially B or C grade setup.
True.
Well, I don't know. You know what I mean? Like,
Damn, what's an A grade then?
It ain't B, C grade when you see the profits afterwards.
well, that's a thing. Yeah, that's a thing as well. Like, your win rate's there with it, and you are getting a ton of profit. Like last night, ended up finishing the account with just those two trades on like 6%.
Damn, nice.
You know, and like that's not going off the entry criteria.
Yeah, true.
Or like an A grade setup, but that's going off what I see in the market happening every single day when there's
Data.
Yeah, data collection, hey.
Up there.
Yeah, but that's an interesting one that I've sort of found difficult to put something to it, you know. Am I impulsing or am I just really, really good at reading the market?
Yeah. But that's probably also something, like that's the reason why it's not taught.
Yeah, fair.
That's, you know, like your edge, but that you see, and it's not really something, because you're going with intuition there as well.
Yeah.
You can't really tell someone, when you see this happen.
Can intuition be taught though? Do you think?
Oh, nah. I think that just comes with time in the market.
Not necessarily just with trading.
Oh, right.
But, you know, intuition in anything.
Are you going to do one of those count things for every time you say
Time in the market.
time in the market? Ding, ding.
Intuition. I don't know if or intuition you can't really buy. It's like.
Do you know something that I read though, which like intrigued me? Is I was reading something about billionaires, and I read that the thing that they work on the most is their intuition.
How do they do that?
Yeah, well, that's what. Yeah, that's
Right.
the question. That's the billion dollar question.
Yeah.
Like intuition in terms of being able to think quickly whether or not this is going to be a good business idea or not, whether or not this person is good to get into business with or not, whether you're going to trade, buy this stock or not.
Right.
Is it good? Is it not?
I see what you mean. So like quick decision making, really.
Yeah.
Like billionaires, like time is money, and so they just need to be on.
Yeah.
So you need to have good intuition.
Yeah.
Yeah, it makes sense.
Yeah, which is nuts. But then obviously if you can build like a very, very good intuition, and I guess like a lot of it goes off probability as well. But then also getting a feel for who you're going into business with, or, what you're potentially buying to make money.
Yeah.
Yeah.
Yeah, probability. That's an interesting one, eh? Because, we went to the movies last night. We went and watched the new Captain America and the villain.
Yeah.
He's just like calculating probabilities in his head. And I was like, man, this guy would be a mean trader.
I was actually thinking the same thing. Like, that was nuts.
Yeah.
I've never heard of that villain, though. Stern.
Yeah, neither.
Is his name Stern?
Yeah, I wasn't a fan of the movie.
No, you're fair.
Was it kind of boring? Yeah, because I looked over and you were like on your chart.
Wait, both of you were on your charts. And I got FOMO, and then I was like, no.
Then I just saw a light show next to me with all the different colours.
Major lazy. Oh, crack up.
But we'd all like put our dimmed our screens so like no one could see.
I have one of those screen things on mine, eh? And so like when you're to the side of me, you can't see my screen.
Yeah, same.
And it makes it
I need
more
one of those.
blacker. Yeah, like it makes it darker. So like if I'm looking at it straight on, you wouldn't really be able to see like a lot of light coming out.
True.
Yeah. Handy.
True. Andy.
Put that in your arsenal.
Oh, wow.
But yeah, Captain America, 7 out of 10.
Yeah.
I was like I was being generous, with the 7 out of 10. I was more pushing like 6.
Yeah. Apparently, you have to. There's like a program, like a series to it as well, or something.
Yeah, it's because it's like the new Avengers coming in, like the new.
No, isn't there? There is a Falcon and Winter Soldier movie already, eh? That was before he became Captain America.
Anyway, it was mud.
What happened at the end? I didn't watch it.
Oh, whoa.
Yeah. Spoiler alerts.
Oh, right.
No, you already said it in the day in the life.
Yeah, fair. But yeah, him would be insane trader. Like the probability that he has, like, could read.
Yeah.
Bro, that's crazy. I wish I could have that.
Yeah.
Like right now, that would be my superpower. If I could have one.
No, time travel.
You time travel away. That's the ultimate money maker, man.
Yeah, that's crazy.
Hey.
That's good. Did you hear that? Oh, nah, let's not get into it.
I was going to say, go back to 1630, yeah.
Let's just buy it here.
Yeah.
Put the house on it.
Yeah, facts.
Yeah, is there any like setups that you see that you get into anyway, even though it's not your A grade? Don't lie.
I mean, sometimes.
I'll be honest. Sometimes on futures, I'll get in off a level,
Yeah.
but only if it's, even if it doesn't have a point of interest, but it's got to be stepping up to it nicely.
Yeah,
Like I can't just run up to it or run down to it.
Yeah.
But yeah, sometimes I will look at it and get off a level
It depends. It depends how close the level is to a POI.
to something. Yeah,
or to something.
Yeah.
Yeah. And then I'll think about it. But nah, not really, bro. Kind of just, entering off a POI mainly, or a level that's as close to a POI as possible.
Oh yeah, same.
But quite disciplined then, you would say.
Yeah,
Just
bro.
to try and stick to your A grade setup.
Yeah, do my best to.
How often would you say that you find your A grade setup through a day or a week?
Oh, every day.
You find at least one?
Yeah, at least. There's probably a few. Like
Yeah.
sometimes I wake up in the morning and look at New York and I'm like, there's like 3 or 4 in New York.
Mm.
You know, like if you're just getting continuation, like, break, pull back, break, pull back. I see it all the time in New York, bro, and it just like makes me sad. Yeah. Like, there's just so much money to be made in New York.
Yeah, it's crazy.
Yeah.
Yeah, and we do. Yeah.
True. Must be nice.
Yeah, so fair. Like, there's a few different entry criteria that I have, and which is like sort of why, in my head, I've had, what is an A grade setup? Like, I do have different entry criteria, which will be, pull back to a point of interest, entry, trading off like different key levels, whether it's like a resistance or depending if we're in a consolidation zone,
Right.
trading breakout on US 30 or NAS because of the volume. Like all of those different entry criterias, which means I haven't really got the data to know which one is going to be the best.
I gotcha.
Which is probably like, because people have been asking lately, like, what's your A grade setup, like this and that. There's different situations happening within the market a lot. And I've sort of, worked on a lot of different stuff throughout my trading that now I just have all of these different entry criteria for different situations. So no matter what the market's doing, I can find a trade if I wanted to.
Yeah.
But I don't know which one is going to be an A grade. They're like, all of them I look at and I'm like, get into that.
Yeah. Bro, you must see setups all day then.
And it all makes sense to me too, because like you see price action happening and you're like, oh, missed that, could have got into that. Or, oh yeah, should have got into this. And like when I was going through like learning all of that, it sort of contradicted a lot of stuff as well.
Right.
Because I was like, oh, like stick to one thing because this one's better, stick to this because this is better.
Yeah, I see.
Whereas now I sort of have the maturity within my trading to, not worry if I'm getting into all of these trades or if I'm missing all of the trades, because I can just trade when I want to trade, which is primarily going to be New York and NYC.
Yeah.
And the two different trades that I do get into during that time is going to be off points of interest, or it's going to be with the volume breakout.
Yeah. How often would you get into like a volume breakout entry?
I mean, it's not often happening. Like, it's not often happening with NAS and US 30. Like, a lot of the time it will pull back to a point of interest and then go.
Okay.
But if I do miss the pullback to the point of interest and then, I've looked at it too late or it's happened before market open, once it pushes up and starts breaking that level, pushing for a breaker structure, that's when I'd use it.
True.
Like, I'd enter it off there and then, if it keeps going up and then it, sort of shows sign of slowing down or it's coming to like another key level, then I'm getting out and seeing what it does from there. And if it ends up pulling back to a point of interest that it's just recently created whilst I was in the trade, then I'd look at getting in off that entry criteria.
Right.
Do you find those breakouts, those setups come quite often when Asia and London has consolidated together? And then, then it's looking to break out? Or do you find maybe London is the move down to your POI, or are you talking about just in NY it'll come down to your POI and then go? You know what I'm saying?
Yeah. I know what you mean. Yeah, it's a hard one. Like yesterday, we had like a breakout strategy, a breakout entry, which price pushed down and like kept going down, and I got into that trade. However, during Asian and London, NAS had pushed up quite a lot, and it didn't have that consolidation. But because they had pushed up quite a lot and not get much of a pullback throughout that whole push, it was just easy to read that we're overextended and price should be coming back down, and volume just showed that. Usually with consolidation, you'll get like the breakout and then the pullback. But if the breakout happens and it just keeps going, like I've just miss it. It's going to go to a certain level, and then you can trade it down from there. You just have to be patient. But yeah, for me, it's just every situation is a little bit different.
Yeah, that's ideal. Like because you're so experienced in the amount of things you've seen in the market, you're able to be dynamic on your entry models. But I don't, because I've never traded a breakout ever, so I don't have the data on that. But if I started doing New York and started looking into doing breakouts, built the data on that, then I'm sure like that's something that you could become a bit more dynamic on your entries. Yeah,
because it's crazy how we know, like you guys learn the same strategy as what I teach. I trade that same strategy, but I have different entry criteria. And I think that's something that everyone has to develop on their own. It's like their entry criteria and what their A-grade setup's going to be. Because I could tell you my A-grade setup, but it's not going to give you the confidence. I mean, potentially it might, but, it's not going to give someone the confidence that doesn't have that data backed by, testing it out. And seeing what's happening within the market. So would you say that, like, as, someone that is potentially wanting to know someone's A-grade setup and just copy that, or do you think that they need to be building a A-grade setup themselves after they learn, like, a strat?
Yeah, that's the edge, eh? Like, we all have our own edge. Like, even between the three of us, we'd all, like we've just discussed pretty much, entry models. But you've got the strat, but then you've got to find your own edge that just completes your package. I was going to say Arsenal. I was like, I will not go in there again. You know what I mean, though? You get taught the foundation. These guys. And then you got to have your own edge.
Yeah, no, you're bang on, bro. That's it.
Yeah, that's it. Yeah, definitely completes the package. Oh, wild! Any steps that you guys think that beginners can take to start building their A-grade setup, or what they have to do beforehand before they can
time in the market?
That's what, but actually, though,
it is. Legit.
You need time in the market.
Time in the market.
But like, if there is an entry that you've been getting into, say you're getting into like a 5-minute POI, and you've been like winning 7 trades out of 10 every time you get into a 5-minute POI on a pullback or a retrace, then that's probably your A grade setup. But if you're getting into like a 1 minute and you're losing 7 times out of 10, then that's not your A grade setup. So yeah, just building that data, time in the market.
What's interesting? Like a thought that I just had when we were doing signals beforehand, and then like we'd have a 38% week, and then we'd send all the stats out. Like these are the trades that we won, these are the trades that we lost. Overall, if you went into every single trade, you would have won, 38%. It's crazy to think that people that are paying for the signals, because potentially like we had lost 2 in a row, that they wouldn't get into the third one.
Yeah.
But for them, they're just trying to copy what we're doing. Yeah. Like we're getting into those trades regardless, because like this is what we're trading. But for them, we're like, oh, I just lost 2 in a row without even knowing what these guys are looking at or like doing. why would I get into a third one and potentially lose again?
Yeah.
And it's like that psychology that they have of not knowing the data or not understanding what we're looking at or why we're looking at getting into these trades, which makes them, not get into the trade, and then they don't win the winning one.
Yeah.
Mm.
Hey, so that just, sort of solidifies that you can't really copy someone's A-grade setup. You have to build your own edge. You can use other people's A-grade setup to, sort of critique yours, but you need that time in the market to be, building your knowledge around what you're going to do as a trader, which is, pretty much why our intermediate course is just purely the foundation of trading. Because once you start getting into trading yourself and building all of that, getting into the advanced course that we have, it's all about building your own edge and building your psychology so that you can, become a profitable trader yourself. But that's so interesting. Would you agree?
Yeah, 100%.
Yeah. Nice. Well, what?
You got some editing to do here.
No, I'm leaving this all in. These guys are day traders. These guys trade. It's these guys.
Right.
Like,
It's just like hanging with the lads, eh? Like,
What, the podcast?
yeah.
Yeah.
Like, it's
It's just yarns, man.
yarns.
but like, these are the type of people that are day trading. Like, if these guys, these cracker jacks can do it, you can too.
Oh.
You got to enjoy what you do.
Yeah, 100.
Enjoy what you do. Have fun along the way.
That's it. That's how you build. Well, that's everything that you guys need to know about, building that A-grade setup, getting that high probability trade. It's something that you have to be able to do yourself after you learn the foundation. So if you're at the point where you're just beginning your journey in trading and you want to be able to, either copy someone or start building an A-grade setup of yourself, make sure you know the foundation of how the market moves before even trying to build an entry criteria. You can't build an entry criteria without having that foundation, because eventually you are just going to lose everything, and that's not what you want to do. Again, we will be sending signals out, and that is going to be off our A-grade setup. And this is coming from, traders that have a high win percentage and are making money every single day. So it's a little bit different, taking those signals off traders that are doing them themselves, and we are getting into those trades. I know a lot of other signal services run off AI bots and things like that, and it's just not, it just doesn't work. Like, it's crazy. But yeah, there's a difference. And if you want to build that A-grade setup, make sure you have, your criteria and the rules that you are going to stick to for all of those, because that's what's going to make you profitable at the end of the day. So thank you very much. We'll see you on the next one. Like, share, subscribe, hit the notification bell. We really appreciate it.
Trading highs on what a ride, from doubt and fear to joy inside. With every lesson learned I grew, ambitious investing pulled me through. One night I made 28%, now it feels